Good morning and welcome everyone to the Moneycontrol live stream. You're watching another edition of Markets with Santo and CJ. Unfortunately, Santo is not with us here. He's enjoying his, yearly holidays. So do make a leeway for him. But of course, I'll take on the show and hopefully you'll be entertained. That said, we have a lot to discuss. It's a big week for the market. You have the Gujarat elections outcome coming later this week. You have the RBS policy coming later this week. And then on Friday, we had the bombshell US weekly jobs data that we had. So we'll get to each of them. But before that, let's put the IT sector in the spotlight today. And today, we are going to discuss an interesting aspect of how IT companies make their revenue. And this is the digital transformation of the cloud spending side. Now, Amazon Web Service, one of the biggest cloud service provider globally, reports came out over the weekend that it has been asked by clients to figure out ways to actually reduce the cost that they are facing because of taking up Amazon Web Services. Basically, clients are telling Amazon that they are not as inclined to spend on cloud services as they were, say, 6 months ago. And this is down to the fact that at this point of time, US companies in particular are a little concerned as to whether the recession next year, how that will affect their earnings, whether they should start looking at cost-cutting measures. And therefore, these are the reports that are coming out from US, Expedia, the National Football League in the US, and some of the other major clients. They have all indicated that they want to cut down on cloud spending. Now, how will this affect Indian IT services? Now, we know that there are three big global cloud service providers. There is Amazon Web Service, there is Microsoft Azure, and there is Google Clouds. Now, so far, only AWS has indicated that clients want to cut costs. If you look at the performance of Microsoft Azure and Google Clouds in the past 2-3 quarters, they have posted north of 30% sort of growth on a year-on-year basis as far as revenues are concerned. But going ahead, with Amazon's commentary like this, it is very likely that Microsoft Azure as well as Google Cloud may face pressure on their cloud revenues. Now, Indian IT services are sort of vendors to a lot of these cloud service providers. They help, say, Microsoft Azure or Amazon Web Services of the world to provide their services to the clients outside. Now, if their revenues shrink, that could have a fall-on effect on IT revenues as well. And remember, the past 2 years story has all been about digital transformation and cloud growth. If this main engine or driver of revenue growth for our Indian IT companies sees a slowdown because of US recession or European Union recession going ahead next year, then that will raise question marks over the sustainability of revenue growth of a lot of the Indian IT companies. If you think about it in another way, things were starting to get a little better for IT stocks in the sense that valuations were so depressed earlier this month, earlier in November, that a lot of investors out there started thinking that maybe this was the best time to probably go contrarian on the IT sector. But with this sort of news flow coming in, probably you could see another leg of derating coming in for Indian IT companies. Now, if you look at the valuations, are valuations comfortable enough to take a contrarian trade? That was a general view of the market, and you have seen that in the sort of revival that we have seen in buying interest in Indian IT stocks over the past 1 month. But Nomura earlier today came out with a report saying that although the premium of Nifty IT index to the Nifty 50 index has shrunk a lot compared to where it was in 2021, if you look at the average valuations of Indian IT companies, especially the the top 5, your Wipro, TCS, Infosys, Tech Mahindra, and HCL Tech, their valuations, although they have corrected a lot from their record highs, they still remain quite elevated when you compare it with their long-term averages. So it seems at this point of time there is cloud on the horizon as far as the sustainability of IT growth is concerned, and at the same time valuations may have not yet reached the comfortable levels where investors could start seeing a reversal in the fortune of the sector. So that was the spotlight. I think investors going ahead would be a little careful as far as the IT industry is concerned. We still probably have to wait for that opportune time where one can start bottom fishing in many of the IT names. Moving ahead, looking at the trade setup for today, and the setup looks a little decent, although it, at this point of time, the exchange Nifty futures are indicating a moderately positive start for Nifty, Nifty 50. But if you compare it to what is happening in rest of the Asian markets, it seems like a relatively weaker or underperforming start for our market. Wall Street, the handover for Wall Street overnight was a little weak, although benchmark indices there did recoup a majority of the losses that they had seen when they had opened on Friday evening on the back of that very strong, US November jobs data. Now, job creation in the US economy in November was in excess of 260,000 as compared to economists' expectations of only 200,000. So clearly, the US labor market is going strong, and that is resulting in a market rethinking its own thoughts about when the Fed will stop raising interest rates, if at all. Looking at the US dollar, of course, despite the strong jobs data, the US dollar remained quite weak on Friday. It ended the day below its 200-day moving average, which is generally a positive sign as far as emerging markets like us are concerned. But as I said, the Asian markets will be the highlight of the day today. Chinese stocks rising almost 4%. The benchmark indices there rising almost 4%. Yuan strengthening very considerably against the US dollar after the reopening of more and more cities. Also, Morgan Stanley has upgraded its view on the Chinese equity market, recommending clients that maybe it is time to buy one of the worst performing markets in global in the global economy this year. If you look at the FNOQs of the day, well, on Friday, we did see some bit of short covering coming in, stocks like BHEL, Astral, M&M Financial. While on the short, stocks where short positions were added, we had Eicher Motors and Tata Consumer Products. Also, from a trading point of view, if you look at the 18,900 and the 19,000 strike price call option, there was a heavy amount of selling pressure seen there, which basically is indicating that these two levels could remain a near-term resistance for the market going ahead. Moving on to the newsmakers of the day, and very interesting names here too that we came up with. And the first one is Hindustan Aeronautics. Very positive news coming in as far as the Q3 earnings of the company is concerned. Now, the stock will be in focus after it won a large tax refund case against the income tax department. Now, HAL has said that it will get a tax refund of as much as 427 crores for the assessment year of 2011 to 2012. Now, whether most likely this tax rebate will be credited in the company's account this year, perhaps in Q3, perhaps in Q4. So that will clearly be a kicker as far as the bottom line or net profit of the company is concerned in Q3 and Q4, and you could see some bit of positive reaction coming in on the stock today. Moving on, the next one is Ion Exchange. Now, the stock will be in focus after winning a very large contract from Indian Oil Corporation. The company has won a contract worth 343 crores for water refining and water waste management at the oil refiner's Panipat refinery. So a big order coming in for Ion Exchange, and I would expect that you could see a decent amount of up move on the stock today. The next segment of our day today is hot brokerage bets, and we have two brokerage bets coming in. One a contrarian and one a consensus bet. Excuse me. Of course, the contrarian bet is Balakrishna Industries. Now, Ashika Broking has come out with a very contrarian report, a buy rating on the stock with a target price of 2,370 rupees. Now, why the brokerage has given a buy rating is because they believe that Balakrishna Industries deserves the premium valuation that it is getting on, as compared to some of the other tire companies or its peers out there. The brokerage house believes that company has superior margin profile as well as return ratios, and therefore these premium valuations are totally deserving. They said that the overseas off the road market demand is quite strong for Balakrishna Industries at this point of time, and the new capex of 2,250 crores is likely to boost earnings going ahead. Excuse me. I think I have a bad throat this morning, so do pardon me for that. Moving on, ICICI Bank, Morgan Stanley coming out with an overweight rating on the stock with a target price of 1,215. Now, they have initiated coverage on a stock and they believe that at this point of time, the bank is catering to all three major segments, that is retail, commercial as well as corporate clients, and the growth profile there seems to be very, very attractive. Also, Morgan Stanley was highly impressed by the new technological products and innovations that ICICI Bank has been doing. Now, ICICI Bank had invited a lot of the analysts that are covering its stock for an analyst day meeting, and that is where they, introduced a lot of the analysts and the large street investors to some of the digital products that they have been working on. And Morgan Stanley is of the view that these digital products and these innovations is likely to drive higher customer retention as well as cross-selling opportunities for the lender going ahead. Moving on, the next segment and our last segment of the day, that is stock takes. Now I have three stocks here that have been earmarked for today's trade, and starting off with M&M Financial Services. Now the stock will likely be in focus and is likely to see a lot more of short covering in today's trade, because it has reported a 70% growth in disbursements in November. That is a very, very strong loan growth number coming out from M&M Financial. CLSA, brokerage from CLSA noted that disbursements were healthy. Of course, if you see 70% growth, it is a little bit of an understatement to say that disbursements were healthy. But more on top of that, collections were also very strong. Now remember, M&M Financial recently faced flack from RBI for the use of third-party services for loan collection. There was a very unfortunate case with respect to some of the loan recovery agents that M&M Financial was employing. Now, despite all of those problems, the collection numbers have remained quite strong in November, and that is clearly a very positive sign as far as M&M Financial is concerned. Morgan Stanley said that the November business update was very, very strong, and it is likely to aid further re-rating in the stock, which had sort of been down and out over the past 12 to 18 months. Moving on, the second stock on my radar today is Angel One. We know it as better known as Angel Broking, of course. Now, the stock is likely to see a little bit of selling pressure today after what seems to be a bit of a weak November business update coming out from the company. The company, for the first time in months, has actually seen a loss of market share on a month-on-month basis, not only in the cash segment, but the derivative segment, which has generally been the good growth driver for the company, while its client base has grown about 2.6% on a month-on-month basis. But if you look at the gross client acquisition, that has actually fallen about 6.3% on a month-on-month basis. So clearly, not a very happy November as far as Angel Broking is concerned, despite the fact that we have seen a very, very strong rally both in October as well as November in the Indian equity markets. That said, despite the very weak negative update coming in from Angel One, that I have largely remained quite positive on the stock. And I still feel that probably among the listed companies, at least at this juncture, Angel One remains the best proxy as far as the retail participation or the direct retail participation wave that we have seen over the past 2.5 years. So the entire financialization theme, if there is one stock that really plays into that, I think at this point of time, and it is Angel One. So probably there could be a case, maybe once we have seen a little bit of correction on this counter, that you could see some bit of follow-on buying coming and some bit of buy-on dips coming on this counter. Overall, the stock has given stellar returns this year, despite the fact that many of its peers actually have seen a very, very weak 2022. Moving on, the last stock on my radar today is Persistent Systems. Now, a very interesting report coming out and a contrarian report coming out from JP Morgan on the stock. JP Morgan has interestingly downgraded the stock to a neutral rating from a buy rating earlier. Now, the downgrade comes after a 31% rally on the stock, and they now believe that the stock is quite fairly valued. They do not see any sort of positive catalyst as far as a re-rating is concerned for Persistent. But the key trigger would be any sort of margin expansion going ahead in the coming quarters. And on that note, let's quickly take a check on the market. We have the opening bell, and it has been a slightly tepid start, as indicated, a moderate start for the market. The Sensex is both Sensex and Nifty are around the flat line at this point of time, but clearly the trend from last week continues. It's the broader market that are really doing well at this juncture. The Nifty Mid Cap 100 Index and the Nifty Small Cap 100 Index higher by about 0.3 and 0.4%. If you look at the Nifty Bank, clearly that is one of the reasons why we are seeing a weak start. Around the flat line at this point of time, the Nifty IT also around the flat line. The advanced declines are quite strong, about 1,764 stocks rising for about 292 stocks that have fallen on the NSE at this juncture. My beg your pardon. On that note, let's wrap up the show, and keep commenting, keep telling us your stock views and your queries on the comment section that you can see at the bottom of your screen. Also, keep following us on the social media links at the bottom. You can also, of course, track moneycontrol.com and download the Moneycontrol app for the rest of your financial news. We'll catch you again live at 3 p.m. Till then, have a great trading day.